Hello and welcome to the Close Call Show. This is a new series called the Close Call VC Talk. Hi, Avantika. Welcome to the show. I'd love to kick this off. So, we're going to start with a bit of an introduction about you, who you are, what your journey is, and also tell us a bit about the fund that you're working with.
Brilliant. Maybe I'll start with Type 1 and kind of tell their story first and then jump into my background. Type 1 is a US headquartered fund, Los Angeles based. We opened our London office in 2022, which is when I joined them. We are quite a unique fund, I guess, in that sense that Type 1 is not from the diabetes. It actually refers to the Kardashev scale. Nikolai Kardashev was an astrophysicist in the 80s, I believe, and he theorized about how civilization goes through evolution technologically. And his calculations refer to a Type 1 civilization where humanity is able to harness all of the energy that's available to us on our Earth, so geothermal, solar, wind, etc., and utilize all of that energy efficiently with technology to provide sustainable growth for civilization. And so that's that first kind of hurdle that he's looking for as his milestone. Some calculations tell us that we're still 100 years away from even accessing and breaking through that Type 1 hurdle. According to Kardashev, once you move beyond Type 1, you unlock a Type 2 civilization, which is where humans can become spacefaring as civilization. And so when we were founded in 2019, we kind of took inspiration from that scale and that theory about humans becoming spacefaring in a distant future, but also thinking about what investments can we do today to enable us to rapidly move towards Type 1 and also unlock the full potential of what Type 2 offers us. So in 2019, we started originally as a microfund doing a lot of SPV investments, kind of feeling out the industry to understand whether investors were A, interested in the space industry and wanting to participate in the space industry, and B, whether there was enough innovation at the time happening and enough spin-outs and startups to justify having a fund focused in space. I think we learned two things. I think we learned that, yes, investors are very interested, and beyond just private investors, but public funds and public money is also very interested in the space industry because of how it feeds into other verticals. And then secondly, that yes, unlocking space, there's a lot of innovation, but there was a lot of fundamental work terrestrially in science and in technology that will one day have an application in space. So robotics industry feeds perfectly into the fact that when 200 years from now, when we have a research colony on Mars, we're going to need a lot more robots doing work than we are human beings doing work. And so when we raised our second fund in 2022, we decided to increase our focus area. So 50% space tech and its infrastructure in space. So looking at habitation and replacement of the ISS eventually, looking at in-space manufacturing and what that unlocks both from a terrestrial point of view for material science, but also eventually in space use. And then lastly, looking at the lunar-based economy, specifically communications and transportation, being the first kinds of elements you need when you're terraforming and trying to expand that footprint. And then 50% of our portfolio is terrestrial deep tech. So again, coming back to that unlocking of fundamental science that enables space. So we tend to focus on a lot of robotics for obvious reasons, industrialized robotics in many verticals. We do also focus on next generation future of compute. So looking at AI platforms that are more fundamental shifts in how we think about data science and machine learning, and also hardware in that domain as well. And then lastly, we look at biotechnology from the lens of longevity science. So looking at mechanisms of action that are more whole systems based for biology as opposed to single organ, single disease, single asset based. And the reason I prefer to do the Type 1 introduction first and then my introduction is because my background is biotech. That longevity aspect and our interest in biotechnology very much is something that I've been driving for the last few years with Type 1. My initial studies was in biomedical science, specifically focused in genetics. At the end of my undergrad, was tossing up going into med school, which was the obvious option, and then going on to do a PhD instead and going into research. And really, neither of those options appealed to me. I didn't want to have someone else's life in my hand in the first place. And I also couldn't see myself being someone who's lab-based and focused on a very niche and very narrow, but very deep piece of research that would then be a building block for the future of science as well. So I accidentally, I guess, found a master's program at the University of Auckland, which is where I studied. I grew up in New Zealand, which was focused on the commercialization side of life science industries. So very much on skill development that you would similarly see in an MBA program, but focused on specific to life science industries. That's offered in 3 universities in the world, I believe. It's University of Auckland, University of Cambridge is a sister university, and I think it's Bern in Switzerland that also offers the same program. So it was quite an interesting one where I didn't really know what I was getting into, but I knew it was much more the direction I wanted to take my future. So from that, I ended up doing 5 years on the commercialization outwards side, so working with university tech transfer and academics to build spin-outs and to support them through that process. After doing that, I decided I wanted to flip to buy side. So I spent 5 years with a boutique consultancy, also in Auckland, but working across Australia and New Zealand both, that specifically focused on life science multinationals that are globally headquartered, unable to access deal flow in Australia and New Zealand because of time zones, because of distance. And I think that was really, after the 4.5 years there, I decided it was time for another switch. Seems to be a pattern every few years. I'm ready for a bit of a switch.
I think that's a really good one because you get comfortable after a few years.
Yeah,
You know how to move things, you know how to maneuver around rules and red tape. I think then a switch really sort of shakes things up and then you're learning and it's exciting.
yeah, absolutely, absolutely. I think this ended up being a much bigger switch than perhaps I was hoping or expecting it to be. The consultancy I was with at the time, originally in the late 2000s, they were actually the first life sciences venture fund for New Zealand, funded by public money, so pension funds primarily in New Zealand are accessible for venture investment, and also by the global corporates that we were already working with in our consultancy group. And I think the plan always was to raise a second fund. When we had set out to do that in 2014-15, when I joined as a consultancy, it really wasn't the right time for the industry to be looking at remote funding options. And the government wasn't also in a position to be investing in early stage funds as well, emerging managers. And so by the end of my tenure with them, I think the transition, it really hit me that if I wanted to move into venture, I was going to have to leave the comfort and the small market that is New Zealand. So looking further afield, my husband and I ended up quitting our jobs and kind of packing up house and moved to London just to see if it was possible. 6 years later, it was
You're still
possible.
here.
I'm still here. I'm very,
Mhm.
very embedded in the industry here and happy to be here.
Wow, thank you so much. What an eloquent introduction. And also the explanation to the name Type 1. Who'd have thought? I definitely didn't know. I thought, when VC funds name their funds, it's usually something that's catchy, that's snappy, that sort of gives the essence of what kind of people we are. And so when I read Type 1, I thought, okay, these are Type 1 people that are investing in Type 1 kind of companies. But this makes a lot more sense. Very, very interesting. Now, I also want to touch upon one thing. Um, your transitions and your jumps, it's pretty big, right? So you didn't move industries, you also moved geographies. So tell us a bit about how should one think about the move? If you were to go back and do this again, what are the things that you would do early on?
Yeah, of course. I think I was maybe in a lucky position with the naivety of which I came into the UK. So I had a couple of friends who had done that. I think one of them had done 18 months and one of them had just finished their 2 years and come back to Auckland. So it was well timed in that I had someone to speak to and just, ask what's the lay of the land? What should I expect? Those sorts of very basic questions. And I think because they were friends that I was asking. I was able to get a very honest opinion of kind of what to expect of living in London, and then just sort of how to go about finding recruiters and accessing job opportunities. And I think the main kind of feedback I got was you just spray and pray. You throw your CV out there to as many people as you can, and you talk to as many people as you can, so that at least you're on someone's radar, even if it's not the right person's radar. That someone might be able to connect you to the right person. And so I think when we arrived here, that was very much what I did. I just joined as many networks as I could. I think one that sticks out for me was the New Zealand Businesswomen Network. It's quite a small network, but very well connected and quite supportive as well. So we just kind of, this was pre-COVID times, so you got together for a coffee and shared what you were looking for, and people were very open to say, I know someone who could connect you down the line. And so that was quite helpful in just kind of not feeling alone in that journey, and then just going out to as many random LinkedIn meetups that I could find. So I think there was a couple that Excel networks, and one Nucleus is a bio network as well. I just kind of spent time on their website and looked for events that they were hosting that I could just show up at and have a conversation with a few people. I think that was great to help me understand the market. It's probably not what helped me get the job. It was the LinkedIn scouring on every hour of every day and sending my CV out that I got lucky with someone willing to give me an interview. And it was quite nice that way because my business partner who I work with in London, we both set up the Type 1 UK entity. I met him at my first interview. So we've worked together now for almost 6 years, and we jump shipped from our previous fund that we were at into Type 1 as well. So I think it was more just right place, right time, willing to take a risk in terms of the career transition.
Well, so your advice then for anyone that's thinking about making a geography shift and a career shift or an industry shift is network as much as possible, use all platforms available. There's so many free events, LinkedIn, now Luma, Eventbrite, whatever. So just to get a lay of the land, meet as many people as possible. So I think that's the way to go, because what else can you do, right?
Yeah, absolutely. And I think rely on networks of networks as well. Don't be shy to ask for someone who can introduce you to someone else.
Well, on that note, I wanna shift gears and ask you about your journey as a VC, right? So you've been with Type 1 for 6 years, and before that you've been on the buy side. So tell us a bit about how did your role change from new to the game VC to now VP of investments? What did you learn? What did you add to your plate as you grew up the ladder? And what did you sort of say, okay, I don't have to do this anymore? I mean, as a VC, we always do everything at any point in time.
So when I first arrived here, my first job was actually at a different VC. So in 2019, I joined an EIS fund that was London-based, but invested throughout the UK. That was where I met Sanjeev, my colleague now. But I think interestingly, the thing that got me the job was the confusion of my master's degree, which is not an MBA, is an MBE, but everyone read as an MBA. And I'll have to admit that I think that's what got me the job. So in essence, I'm sure we could say it, but I think my skill set on paper was really hard to interpret as how it fit into the venture bucket, because I wasn't doing any investments for the pharma companies that I was working with. I was doing a lot of scouting for them. And I think kind of resetting the mindset of what the skills were that I had learned during those 5 years working with them was quite important, and explaining that it was more around, yes, it was still diligence, and yes, I still had a lot of technical work that I did with them. And I think it's very similar in VC when you're looking at startups and you're trying to understand who is going to buy this at the end of the day. It's just a different customer set that you're asking that same question of. So I think for me, the skill set first that I had to learn was communicating that much more effectively as to kind of how my history and my professional training, I guess, fit into the industry quite I think, quite neatly. I think it actually feeds really well into the industry, especially having a technical background and coming into a fund that wants to do deeper tech. But then I think the other major thing for me was that when I joined, my manager was already thinking about his next jump. And so I think it was the month before COVID. So I was on vacation with my husband for a weekend. I received a message from my manager saying he was going to be moving on. And when I got back, it was a bit of a scramble of what are we going to do? How should we deal with this change in situation? Because he was responsible for the investment team, which I sat in. And I think at the time, knowing what was coming with COVID, the fund decided that we were just going to internally manage the situation, which gave me a massive, massive opportunity in being able to say, you know what? I'm just going to do whatever it takes to learn the skills that he's going to leave a gap of. And I'm going to prove to you, while we can't hire anyone because we're all stuck inside, that I could do the job.
Wow, that's a great opportunity.
It's a massive opportunity. And I think it was, I mean, I'm not going to lie, I felt like I was in tears every night because I just felt so overwhelmed with the skill that I had to learn, but also the self-doubt that I could do the job and that I had, because I think as well, coming into it, being doubted that I had the skills to do the job in the first place, it just kind of fed into the self-doubt of, if I can't do the original job, can I really do the step-up job? And so I spent that whole, I think from March when we went into lockdown to August, September when we were allowed to go back into the office, just all spare hours reviewing legal docs of deals that we had done historically. So what are the trends? If I look at 5 of these legal docs for deals, what are the things that stand out as really obvious and essential? And what are the ones that we as the fund have some flexibility on that I can then make comparison notes on and have in the back pocket of when I'm doing a deal, I know what is the non-negotiable and what is the thing that I can say, okay, well, we've got a little bit of flexibility on that one. That was quite a big undertaking in itself. And then just a lot of time learning jargon, understanding the real nuances of what it fits under as a fully diluted versus not, option pools, cap tables, option pools that are allocated versus not. How do you do all these calculations? Do we have existing templates in our folders that I can use to learn about these things? So instead of having to reinvent the wheel and look it all up myself, do we have baseline documents that I can reverse engineer to figure out and ask a question which is more of an intelligent question instead of, I have no idea what's going on, please explain. And I think that was a really steep learning curve for those 6 months, but it then set me up for what happened after we were allowed to exit lockdown. So once we were back at investing, like August time onwards, and as an EIS fund raising our funds every year, it really set me up for the ability to say, I can do this job, and you can put me in front of investors to say I can do this job. And so even at the fund that I was at, that made a huge difference to my ability to run our team. We ended up hiring someone to replace me, and instead of someone to replace my manager. And then when it came to type 1, it was the same kind of skill set, being able to say, well, actually, I've been doing this for a while. I understand the skills that are required, and I understand that if I don't know the skill, I know how I can get the skill, which I think is the more self-confidence piece.
Absolutely. Yeah.
Which made the transition from what I was doing before into type 1 smoother, let's say. It's still a very different way of thinking because the fund I was with before was focused on software and mostly software and AI-based investments, and type 1 is 90% hardware investing, which is much more fun for me and much more curiosity driving for me, being a kind of a nerd myself. And then also having to switch from purely UK-based to international deals as well. It's another kind of, I need to expand the skill set as opposed to relearn the full skill set.
I'm curious to know, when an EAS fund, I'm assuming they're doing software, B2B SaaS, or any sort of SaaS deals, and then you need to sort of be on the top of the game when you're a deep tech investor. So how did that learning go about? Is it, oh, I'm going to read the last 3 years reports on deep tech investments, what's up and coming? Is it just that, or did you have to do something else?
Yeah, I think it was a lot of personal learning and
Mm-hmm.
reading around sort of trends in the industry, especially when we had a specific sub vertical that we were looking at, just kind of really deep diving
Mm-hmm.
into what are the trends that we're seeing globally in that industry, but also how can we apply those to the UK, given that we were just doing UK based deals. But the fund that I was at also had an angel network that we were running alongside. So a lot of the time we could reach out to our angel network and
Lovely.
say, is anyone an expert in this domain? We've been looking at a deal. We would love to pick someone's brain, get some opinions, understand what the limitations are in this
Mm-hmm.
industry or for this technology specifically, so that we could get domain expertise to support
Mm-hmm.
our deals team.
Mm-hmm.
And we do the
Wow.
same now as well with Type 1. We don't have deep expertise technically on our team in terms of everyone on the team, but we have a very strong network of experts that we call upon on a deal by deal basis as we need support.
That's super important for a fund, I believe, because I was recently speaking to another GP in a fund, and they were talking about in the investment team, one cannot and should not expect to have lived experience on deals that they're working on. That's just impossible. Then you'd have an investment team of 100 people, right? So it's then essential to have that expert network that you can sort of call upon whenever you need. Very interesting. In terms of what shifted in your job profile, so would it be then in the beginning it's a lot more scouting, going out and learning the nitty-gritties of the deal, being tactical, and then as you move up it's a little bit more strategic on, okay, what are the themes, where should we go after? Did you sort of move around that angle?
It did partially.
Mm-hmm.
I think and if I look at it as a transition from the previous fund to Type
Mm-hmm.
1, I
Mm-hmm.
think what changed in the role and what expanded in the role was much
Mm-hmm.
more around brand building
Mm.
outside of purely deal completion. Type 1 was new to the UK industry. We'd only done our first deal. It was May 2021 that we did our first deal in the UK. And I think as an unknown name in this market, and then also trying to
Ooh.
leapfrog into Europe,
Yeah.
such a big part of my role ended up being engaging with co-investor networks, engaging with accelerator communities, universities, and tech transfer offices, and trying to understand how, as a international fund, we could be better placed at supporting some of those spinouts or finding collaborators in investors who would be willing to partner with us,
Yes.
and look at international capital instead of just purely, especially at the early stages, purely domestic based capital.
Wow, this is a really, really important point that often gets overlooked. The amount of brand building and selling that investors need to do, especially as new funds, emerging managers. Yeah, it's almost half of the job where you're convincing the founders, hey, this is where you need to work with us. First, be in front of the founders to establish that I'm here and I'm present and I have dry powder to sort of deploy. I think it's a huge part of the job, and as you grow up the ladder, that becomes your main focus on, are you able to attract talent, are you able to attract quality co-investors to work with you? Wow, super interesting. Then I also want to ask you, so in your journey as an investor, is there a challenge or a particular tough day or a tough bit that you've had to maneuver, get around, work around?
It's interesting. Maybe I'll mention two elements here. The first one, something that's entirely out of our control, but also something that we can find ways to work around, is the fact that we're not a European fund and we invest in highly sensitive sectors. So we've had to find ways of not falling into the regulated lines of what is pure defense tech, what in the space industry counts as sovereign tech and should therefore only be invested in by domestic investors versus international investors. How do we help our companies partner in regions that are friendly regions or sovereignly aligned regions, as opposed to where there is conflict between two governments and we can't accept customers from that region or we can't accept capital from that region? That's been quite a complex journey, I would say. for type 1. And very, very unexpected as well. I think initially the space industry was a lot more open and a lot more collaborative, because when we think about it, space is for everyone. It's not just for one nation. But at the same time, we live in a time where conflict and geopolitical conflict especially is picking up and is very obvious now. So I think it was something that we all as a team had to learn rapidly, especially after 2022, and start to understand how we could be more strategic about our alignment. There's elements like the AUKUS partnership, which is Australia, the UK, and US, which is great for us because Australia is a big supporter of the space industry and invests very actively in the space industry, including in international companies, not just domestic. It allows us to collaborate with strong nations who want to keep space open for others and not just be handsy on it. And I also think one thing I learned is being in the UK is quite beneficial, because the UK is considered relatively friendly as a nation. But we've also had situations over the years where we've had to transition founders ourselves or recommend transitions for founders. And I think founders, especially academic founders, are really happy when they make that transition from early stage CEO to CSO or CTO, because it lets them do what they love. It lets them do what they were passionate about and why they started the company in the first place. It's just those conversations can be quite difficult, and it's more about explaining that the skill set that the business needs to grow and remain successful are different from the skill set it needed to get set up in the first place. And the skill set that we needed, the technical skill set, is essential for the growth of the business. But there's a sales skill set, a business development skill set that is needed for the next stage. We try to help our founders understand what that journey looks like. So if they do want to stay as CEO and they do feel passionate about that growth journey personally, as well as the company's growth journey, we're able to support them in understanding how you can do that skill development. So what are resources we can access? What are mentorships that we can put in place to help them to make that career switch themselves? And then backfill the technical roles to support them as well. But then also help them ease into the idea that it's not a demotion.
Exactly.
It's a promotion in a different direction.
Wow. Two really relevant challenges. The first one outside of your control, and I will touch upon that later. I want to talk about this transition. So, at what stage does that transition usually come in? How do you start that conversation? Do you have a blueprint? Because it's not just one investor talking to one person on a one-on-one call. It becomes a board decision. You need to bring all the shareholders into the room and talk about this. So so the first question is, at what stage do you have the conversation? And then how do you go about it?
Yeah. I think one of the things we've learned is that we need to have that conversation as early as possible, at least start the inkling of that conversation as early as possible, and really identify that it's not a failure. And I think especially in the UK and European markets, we're so hard on ourselves as far as what is considered a failure. It's not how the US counterparts think of it. They are so much more embracing of things not being perfect, but using that as a base to build on something that's better. And I think part of that early conversation very much is that it's not that we're saying you're not doing a good job or that we think you're not going to do a good job. It's more that there are efficient and effective ways to structure the business for the right type of growth. And when it comes time for that, we need to have that conversation. But I think from a more practical point of view, when that stage flip tends to happen, we tend to see it more often than not, sort of Series A to Series B stages, when they have, especially in hardware, where we've mostly finished all of the development work, we've started getting early customers, we're starting to look at international expansion, we're starting to look at more complex partnerships and strategic partnerships with customers. And that's when founders might start to feel like it's getting slightly out of their control, that it's entirely new skill set that they might not have built historically. And so I think that ends up being that transition point where we need to start making that decision. And it can be much more around identifying whether there are existing co-founders perhaps where it fits, or whether we need to hire externally. And then sort of moving from that into a more broad discussion with the rest of the board and saying, this is a transition period. This is what might be best for the business. How do we, as a collective group who all have a vested interest in this, think about it? And it's something that takes a lot of time. It's not something it's a quick turnover process. It's more around finding the right fit, the right incentivization, the right support system as investors in the room who can help that company and whoever the incoming individual is. And I should say, thinking in our portfolio, we have not had that situation complete yet. We have the natural division of co-CEOs between co-founders, to one deciding they would like to stay as CEO and one deciding they want to be identified as CTO. And so making that natural division take place, primarily because they have different preferences in how they work with their teams anyways. But we always have the conversation because we understand that we're still early stage investors, and we also recognize that to unlock large sums of late stage capital, sometimes there is likely or potential to have this concern come up with late stage investors, especially at the real growth stages of B, C. We think about IPO and how many original founders actually survive IPOs. I think part of it is about the empathy of having that conversation instead of pushing out a founder. And that's something that I don't think we ever want to experience.
Yeah, it's too painful. It's too painful. You break that trust you've built over the years. It's too much drama.
Yeah, absolutely. And we've had this situation in the past as well, where we had a set of founders where everyone was changing roles within the business, but also everyone's priorities in life were changing. And so one of the founders who perhaps didn't want to be CEO originally stepped in to be the CEO, and through a lot of regular conversations with different board members and different mixes of board members, I think that person has really taken to the CEO role. It took 12 months to get there, but they have transformed how the business strategically will move forward. So I think it can be done for founders to be able to take that responsibility on. It's about the type of support you can provide them to do so. And I think especially, I think about it from, if I was in their shoes, I wouldn't want someone from the outside coming and saying, hey, I think you need some help. I think I would prefer it to be much more of a, listen, these are XYZ things that need to be done. How do we build the right support systems so that you feel like you have the ability to do those, but that you don't individually have to do every single one of those things?
Wow. Very, very interesting. What do you want the founders to do more of or less of? Is there one thing?
Interesting. I'm very introverted as a person. So when it comes to meeting founders, I really like to have more of an intimate conversation with them about not necessarily just about work, but about their philosophy, about their morals, their values, their life, how they think about the world. And I think a lot of founders find that a little bit strange and find that a little bit confusing about why this random girl wants to talk about what they're doing on Saturday night. But I think it's such a big part of getting to know the person that is the founder and getting to know the personality that is the founder. And I wish a lot more founders would put their individual stamp and their individual personality openly out there and not be so guarded about it. I can completely understand why they have to be, and that the industry still is very cutthroat and very, very difficult and small. It's mean, and I know this, investors can be mean,
Mm-hmm.
but when you find investors who are, I think this new kind of new thinking in investors these
Mm-hmm.
days is much more around getting to know the person and getting to know the individual. I think it's worth elaborating on and expanding on and connecting with.
Oh, wonderful. Then the last question, I promise, is what about the future excites you?
What about the future excites me? Space. Even from a bio background, I was a Star Trek nerd from the very beginning. I just think about all the things that we don't know about
Yes.
civilization, about humanity, about being a society in general, more from like a social sciences point of view. And I think about the challenges that the technology that we're unlocking and the challenges that opens up for us and what that means for us as society. And I do think it's going to be a massive challenge because we're either going to struggle with it and implode and end up being much more aggressive towards each other, or we're going to find a way that we can live in harmony together. And it's a very fluffy thing to say, but the world has gotten to a point where we either need to sort it out and work together, or humanity might not survive.
Mm-hmm.
And I think the thing that really excites me about Type 1 is that the focus we have is so mission driven about that long term future of humanity. What can we do to make that reality and keep humans around?
Well, thank you so much, Avantika. On that note, let's call this an episode. What a fantastic conversation. I think you were so eloquent. You went into different topics very nicely, deeply. Thank you so much for sharing your views. Really appreciate it.
Thanks, Jessri. Really, really good to be invited. I'm glad that we could do this.